Hi, this is DENIZ SENYURT. I work as a commercial real estate investment advisor. Welcome to my Location Advisor live event. Before we start, let's first go over house rules. We are posting this event we are live posting this event at my Location Advisor Facebook page and Zoom platform. It will also be posted on my Location Advisor LinkedIn page and YouTube channel. And event will take around 40 minutes. During the presentation, please keep your video off and microphone muted. Feel free to post your questions through Messenger on Facebook and chat box at Zoom. At the end of the presentation, we will do our best to respond to all of your questions. If we cannot, please leave your contact details. We will respond them as much as possible after the event. Let's start. Today, we are going to talk about 1031 tax-free exchanges. Bill Horan, President of Realty Exchange Corporation, has kindly agreed to join us to discuss this topic. Bill is currently a board member of Federation of Exchange Accommodators and the National Organization of Qualified Intermediaries. Bill carries the Certified Exchange Specialist designation. He acted as the president of the Federation of Exchange Accommodators during the term of 2013-2014. He has received Federation of Exchange Accommodators President's Award twice for outstanding dedication and service. Bill was actively involved with the passage of the Virginia law regulating the exchange accommodators business in Virginia. He is also actively involved with exchange regulations at the state and national level with Congress, IRS, and Treasury. Through several real estate schools and real estate associations, Bill also currently teaches 1031 exchange courses throughout the Washington, D.C. metro area. Furthermore, I work with Bill's team on several 1031 exchange deals, and my experience was fantastic. His staff is very professional and knowledgeable. They work with you throughout the process to make sure that your client has a smooth closing. 1031 exchange is a great tool to increase your sales if you're a real estate agent, and it will help your client build wealth in real estate investment. That said, I wanted to share this valuable resource with you all. Bill, welcome to my Location Advisor live meeting.
Thank you. Nice to meet everybody.
Let me admit some people over here. Admit, yes. Some people are started joining, continue joining us, but we have to start working through our questions. Bill, before this meeting, I consulted with several of my clients and real estate professionals. And I asked them, what would be the best question to ask you? And I put together some questions for you. Without further ado, let's dive in. What is a 1031 exchange? I know this is a loaded question. Can you briefly explain for someone who is new to this business?
Yeah. So exchange is, just think of it as you own an investment property, a real piece of real estate, and you're moving that investment someplace else. You're trading it for a new one. You're swapping it for a new property. And so that's what an exchange is. And it's about giving up a value of real estate, because it could be a couple of properties that you give up, and then you're replacing that real estate value on the other side. The basic genesis is you're in the real estate business investment, and then you continue to be in the investment business on the other side when you're done.
Okay. Is this something new, or did people come up with this new, or was it something done long before?
So the concept of a trade, a swap, has been in the tax code since 21. So, but in 1990 is when the IRS issued a regulation and gave us a rule on how to do it where there's a delay in between, where you give up property and buy something new, and they created the role of the qualified intermediary, the middleman like I am. And that's when the market took off, because it used to be where you had to find somebody that wanted your property. You were trading with somebody else. And now we rarely see that. Everything passes through a middleman like me.
Okay. So my next question, why do we need a 1031 exchange? What's the benefit to going through this process?
Sure. So, when you're giving up your investment real estate and you made money on it, and you want to buy more investment real estate, if you just sold your property, you're going to pay taxes, so you lose a bunch of your money. And with an exchange, you get to keep all that money and move it forward to something else, because the basic premise is you're continuing your investment. You're just moving it someplace else. So that's why it's basically not taxable, right? You're staying invested. If you just sell it, put the cash in your pocket, you cashed out. You're going to pay your taxes. That's the American way.
So let's say I sold this, I have this investment property and I sold, and I'm making, let's say, 100 grand on top of it, like a capital gain. You're saying that if I use that money to purchase something else instead of cashing it out, I kind of don't pay taxes. I use that money to grow my wealth, right?
And so because of this idea that you're moving it somewhere else, the gain that you have in the current property is going with you to the new property. So the gain isn't going away. You're just moving it to the new real estate.
You just, instead of paying that tax money, you just use it to grow your wealth with that.
That's right.
Perfect.
That's right.
That's
exactly.
perfect. What is a like-kind property? I know you mentioned about that. Is it a residential home, or what is it? Commercial or retail property? What is it like? Is it I have this residential property, want to sell $1 million property, and want to purchase a commercial property. Is this like kind?
Yes. And so the definition of an exchange is real property for real property, as long as it's considered business investment. So like a rental residential townhouse is business investment, and I could exchange for a commercial warehouse, or I could go to dirt or just raw land, because that's all considered investment property.
I got you.
Or you're using it in your business. I run a gas station and that's my business. That's okay.
Interesting. So what type of properties are 1031 exchange allowed? Like what is allowed, what is eligible, what is ineligible? Your resident, my home, is it eligible? Second home, is it eligible? Like vacation home, flipping, air rights, ton of stuff out there. I got confused with those terms.
Right.
Which ones are really eligible for 1031 exchange?
So anything that is held on somebody's books is business investment. And so that's a very broad definition. But what it's not is it's not a primary where you're living, because that's personal use, or a second home where you play, because that's also personal use. That doesn't fit the definition of business investment. And then something that's being flipped, that's dealer property. That's held for resale. That's not held for investment, and that does not get 1031 treatment.
So flipping.
So builders, developers, Ryan Home doesn't do exchanges, because that's their business, is just buy stuff, add value, and sell it. That's their whole intent. It's really inventory, right? Something you put on the shelf and sell it. It just happens to be real estate.
So let's say I bought a land, and then after a while, I work with a developer and develop on top of it and sell it.
Right.
Is this a 1031 exchange?
Well, you use that word develop, right? So this gets a little gray as to what was your intent when you went into the transaction. So if you bought it with the intent to flip it, right? Then that you're really considered dealer property. If you're you use that developer word, and that typically tells me that's dealer property, that's held for resale. But there's a bunch of factors that go into what tips your hand as to whether you're a dealer or developer versus held for investment. I can give you an example. You own some land, you've owned it for a number of years, and then you do a joint venture with a builder. You've just turned yourself into a dealer. So, and then you can't do an exchange, right? Because it doesn't fit held for investment.
So the keyword is investment. It
Correct.
has to be for investment purposes.
Correct, right.
You have to purchase it for investment purposes, use it for investment purposes, and then purchase something investment purposes.
For the same purpose, you're continuing the business. That's exactly right. Continuing the investment. That's right.
So let's say I have a land, on top of it we have timbers, you know, the wood, and then so I'm selling that, the right to like timber rights.
Right.
There's mine in that land, like oil, for instance.
Sure.
I'm
Mineral
selling
rights,
that
right.
Right. So is it a eligible property to sell for 1031 exchange?
So it's the whole bundle of rights: air rights, development rights, density rights, mineral rights is pretty common, water rights. All of that is exchangeable. Absolutely.
Perfect.
And I've done plenty of those exchanges.
Because normally, as realtors, we usually concentrate on the improvement and the land itself, not the like other property rights. So that I wanted to understand that part. What is the timing for identification and closing on the property? I know with 1031 exchange, there are certain requirements, timelines we need to catch up with.
Right.
So want to make sure that we understand those timelines, because I know it's very important.
Right. So the government gives you 180 days to move your investment someplace else. So from giving up ownership, settlement, give up ownership, to owning new property is 180 days. So in the early days, and there was people may have heard the term Starker exchange. His transactions were over a couple of years. Well, the government didn't like transactions swinging in the wind for a couple of years, so they gave us 180 days to get this thing done, right?
Okay.
And the hard part of an exchange is you have to identify in the first 45 days. You got to commit to a list at 45 days. That's the hard part of an exchange. So start to finish is 180 days, commit to a list in the first 45 days. That's the hard part.
So as a real estate agent, if we are working with a client and who wants to do the 1031 exchange, we need to keep in mind that 45 days is to find that property to purchase.
Got to come up with a list,
Come up with a list.
Right.
And
specific properties.
Specific properties.
Right.
Perfect.
Right.
And
so what we're seeing nowadays, because the market is pretty hot, people can sell today, right? There's plenty of buyers in the market space, but then our clients have to turn around and purchase. Well, my cheap advice, and it's easy for me to give cheap advice, is for them to, when they get a contract to sell, begin to put contracts to buy things ahead of time. Because exchanging is not contracts, it's ownership dates. So in the ideal world, somebody gets their contract to sell, they close their property on Friday, we get the money on Monday, and they're ready to purchase. They've already got a contract to purchase. And then they're not battling the 45-day and committing to a list.
Exactly.
But that takes planning. You really got to hustle.
Yeah, I did the deal, one of the last deals I did with you guys. The buyer wanted to purchase the property I'm listing, and he had some other property. He wanted to sell that and then use that money to purchase it. We kind of agreed in principle that we will wait for him to sell that, and in the process we get it done. You have to work with the other agent too, because it really requires fine-tuning. And working with you guys was really, really helpful to understand the process. That's why I wanted to have this interview and share this experience with the others. So is there, you said that it's really tough to find some properties because there's not much inventory. So during this pandemic, Is there any changes introduced to 1031 exchange process due to COVID-19?
So yeah, there's no change in the process. The government did issue an extension of time to July 15th. So clients that I had that had started exchanges earlier in the year, and they would have run into their 45-day or 180-day end dates, and all of those dates got extended to July 15th. Normally, everybody's exchange dates start at different times.
Yeah.
Their normal process is you add 120 days to both the 45 and the 180. So it's sort of like a sliding scale, but the government didn't do it this time. They just put a hard and fast July 15 date in place.
Do you see any changes, further changes happening?
We do know of another request that's at Treasury, and we know Treasury's acknowledged that request, that there's still issues out here, but whether we get another extension or not, I don't know. They're very busy at Treasury.
I know I work as a commercial agent, and on the commercial side, we have really tough time finding property.
Sure, right.
People are hesitant to sell because the problem is, I see, is that we don't have a price database right now. A lot of people hesitant to put their property on the market because we don't know what is the base to base that pricing.
Right.
The buyer also having tough time to price the risk as well. On top of it, lenders are having the problem, and underwriters having trouble pricing it. So it's kind of a very vague environment we are living in.
Right.
That's limits.
Everybody's got the same issues. Absolutely.
Exactly. And I'm sure residential side of the people having the same problems. That's what I hear. So my next question, tax-free exchanges are executed based on what? Like value of the property we sell and buy, outstanding mortgage, or based on the equity we generate? Like I'm trying to understand, let's say I sell this property $1 million, but I make my equity on top of it is, let's say $200,000. So should I base my exchange on that $200,000 or on that $1 million?
On the 1 million, because that's the value of the real estate you have today, and you're trading that real estate for more real estate. And to not pay tax, you got to go buy another $1 million worth of real estate.
Interesting.
And the second piece to that puzzle is you got to put all the money back in. So when you close on your $1 million property, you got to pay your bills, right? Commissions, all that stuff, pay off your debts, and then you're left with cash. You got to reinvest all that cash to not pay tax.
I got you. So money shouldn't touch your hands.
Well, your cash, it's okay if it happens, but you're cashing out and you're going to pay tax on that cash because the government sees you taking that money out of your deal. You're going to pay your taxes.
So the key to this, sometimes my clients tell me that, oh, maybe I'll get the cash and then I'll decide. This is not the case. You shouldn't be touching the money. The moment you touch it, you're responsible for the tax.
That's how it works. You cash out, you pay.
Exactly. So how much do I have to reinvest to pay taxes? Kind of you answered the question, but just to reiterate.
Right.
So I have to reinvest to pay no tax.
Yeah, you got to reinvest that value. And the way the math works is you got a contract price, and you are going to lower that number by selling costs. So commission, transfer taxes, pay the closing company, those sorts of things. Let's use that $1 million sale number that you said. And then I have 50,000 of closing costs there. My target number, we call that the adjusted selling price because I'm adjusting for selling costs, is $950. To not pay tax, I got to go buy another $950 worth of real estate to replace this thing and put the money back in.
I got you. So my next question, who is the qualified intermediary and what is this role? Why do we?
That's me.
Can I be?
You got to call me.
Intermediary.
So,
can my brother get qualified intermediary? So what is this?
Yeah, good question. Yeah. So the way the government defined who this middle person is it can't be your agent or somebody that has agency for you. So like your brother has agency with you, that's family, or your CPA or your stockbroker. They cannot be the qualified intermediary because agency is you. You can't do your own transaction. So it's got to be an outside party.
So when you say qualified, what makes you, like, do you go through certification process for that? Do you keep escrow account? How do we trust with our money with you?
Yeah, good question.
Part of my asking, but this is an important issue for.
Yeah, good question. Yeah, and that is strange, right? Because this middle person is in the middle of your transaction; they're holding your money. So, you mentioned early on, Virginia has law on companies like myself, and I was part of a group that got the law passed here in Virginia, 2010, I think it was. And so we almost universally practice-wise, everybody opens up separate accounts for clients, and we typically tie the account with the client's tax ID numbers, right? So it's very clear whose money it belongs to. And then typically we have to have the client's authorization to move money. So they're signing some sort of document for us to move money around. We just can't arbitrarily move money around. So in many, many cases, I use two signatures on the bank account. So my signature and then the client countersigns with me. And that's just another layer, a step, because then the bank becomes part of that process. They won't release money without the second signature on the account. So it depends on what's going on, whether how deep we go with that sort of protection stuff. But I'm very clear. I understand how it works. We're strangers. And so we have plenty of protection in place. We know whose money it is. And that's a great question too, because that's very, very important.
It's kind of like elephant in the room.
Yes, very much so. Yeah.
Kind of hesitant to ask about it.
Just
ask.
It's important, right?
It is important.
I wish more clients asked how we deal with this stuff.
So at what point we should involve qualified intermediary to the transaction?
Good
After
question.
Selling the property, or like I have a property, I sold it, I said, oh, my agent told me that maybe you should do 1031. Is this the point, or should I engage with you before I start selling it?
So you have to have the way this exchange process works is you have to have a qualified intermediary before you give up ownership of the property. So the way the government outlined this, we are the ones that are actually stepping in to sell the property and get the money. And then we turn around and buy the replacement property for whatever the client picks out. They choose what they want. I'll send the money to that closing, and then we make sure they own it. So functionally, they give up ownership of the one they're getting rid of. We call it the relinquishing property, right? And they don't get anything. That's the premise. Okay, I'm giving up this property, and then we end up moving the money to purchase something new for them, and then we make sure they're the owner. So they had property, and they end up owning property when it's all said and done. We have to be hired before settlement.
Before settlement. So
right, because if somebody settles and then they have the money, it's over. And you have to have a QI as part of the transaction. It's not just where is the money. Like if the money is sitting at the title company, but you've settled, you've given up ownership, it's too late.
Okay.
Doesn't matter where the money sits.
It is actually a good point. I wanted to just underline this one more time because it will help for us as real estate agents to help our clients save tax, and also maybe help us to create more business for ourselves as well. So if we have a client who is a good has an investment property and is asking you to sell that property, that's the point. Ask that client, would you consider 1031 exchange, because that will save you tax. And that will say, we need to find another property for you. So that's exactly right. And also introduce them to you, so that we can have a smooth transaction.
Right, right. And it's very important that they get to their tax person, because there's a lot of things going on tax returns that it's none of my business on how they do their taxes. But if you're selling an investment property, you got to know how much tax you're potentially going to pay. You got to know your numbers. I call it your pain number. How much pain are you in when you write that check to the government? If it's not much pain, just sell it and get out, right? But if it's a big number, like we got clients that have held property for 10 years or so, and they got all kinds of gain in it, and they got all kinds of depreciation built up in it, those are big, hefty numbers that you got to write checks for. And so they don't want to pay that.
Doesn't really pay attention to that depreciation. Right. It actually has to be, you have to calculate it when you're selling it.
Right.
So what are the types of 1031 exchange? like I'm exchanging this and that, like it's simultaneously. Can I do this like reverse? First, I found the property and then I kind of sell my property. Do you have any information on that for me?
So the law is give up the old and buy the new. That's what a deferred exchange is, a delayed exchange. You're giving up the old property and then you're buying something new, okay? That's what we see normally every day. Somebody just sells something, we take the money, buy something new, and they keep going. A reverse exchange is where, you know, somebody wants to own something ahead of time. Well, the law says you got to give up the old and buy the new, but the government knows people want to try to buy something ahead of time. So there's different ways to structure these things, but just as a general concept, we create holding companies. They're called EATs, Exchange Accommodation Title Holder. The EAT, it's usually an LLC, will step in and buy a property for the client and hold the title, Exchange Accommodation Title Holder.
Okay.
So it's a mechanism to grab control of a new property until you're ready to sell. Those are expensive transactions. Those aren't, you know, it's hard. You got a temporary owner in place, all the issues that come with it. Where's the money coming from? How many settlements do we have? What states are we in? All those sorts of issues come into play. But there is a mechanism to do that, right? The second one that we see a decent amount of is what's called improvement exchanges. So you find something that is of lower value, you're selling something of higher value, you find something of lower value, but you need to put improvements on the property. So we use the same mechanism of the reverse, where a holding company buys the new one and then adds value to it. Because if you're trying to sell $1 million, you got to buy $1 million. Well, maybe we find something for 800. It's a great deal. So the holding company buys it at 8 and we add 200 of improvements. Now it's worth $1 million. The exchange is $1 million for $1 million.
I got you. So especially with the reverse 1031 exchange, it is really good tool if you are in case of like there is no property purchase and it's like a seller's market and you found this perfect property, you want to purchase it, but you can't, you know, sell yours. There is an option to do it.
Yes, absolutely. It's got a clock too, 180 days. So the holding company can only hold a property for 180 days.
Still the same.
Right. The clocks start at different times, but fundamentally, it's still 180 days that you're dealing with.
Okay. One more question. You mentioned that you have to have the list of properties to, like, we sell this property and we have 45 days. That list, can I just call you and tell you the address, or should I be, is it official? Like, should my client send you signed paper saying that these are the properties? Is it something official or just, you know?
Yeah, good question. Yeah, oh yeah, it's official. This is taxes. Got everything in writing. So it's when we get to the 45th day, we've got to have a list of properties of specific addresses. So if somebody wants to buy a condo, I got to know the unit number. Which one are we going to buy with the money, right? And so I have a piece of paper that clients fill in. It's just a form. I got to have specific addresses on there, and then they have to have a signature. So it's typically a PDF or a DocuSign or a fax, something like that, that I can pick up a signature. So the way the law is written, in writing, specific, unambiguous is the term the government uses, and signed. That's critical hurdle. Got to have that before the 45th day.
Right.
That's the hard part, is you got to commit to a list at 45 days. The list cannot change after day 45.
So if I cannot keep up with those dates, what happens?
You mean if you don't identify at 45 days? Is that what you mean?
Yeah, if I cannot identify the 45 days, or if I cannot settle on 180 days, what happens?
That's the definition of a taxpayer. They're going to pay taxes, right? The government doesn't care what the issues are. So it's written into the law. So you've got to have your act together to do these things. So
in terms of identifying replacement properties, from your website, I saw something like there are 3 rules, 3 property rule, 200 rule, 95.
Right.
Can you kind of go over a little bit about that?
Sure. So you sell something, you want to buy something new. We get to this 45th day. You got to give me this list of properties. There's 3 rules. One is the 3 property rule. So you can give me a list of 3 of any value. So you could put a skyscraper on that. Just give me the address of the skyscraper. It doesn't matter the value of the property if it's 3 or less. If it's 4 or more, then you have to add up the value of the list. You got to add them all up. And that value cannot exceed 2 times what you sold. So you used the example earlier of selling at $1 million. That means if you want to give me a list of 4 or more, then the list cannot exceed $2 million, 2 times what was sold. So this is usually part of the conversation with the client. What's the plan on the purchase? If the client is looking to replace the same value of real estate or go up in value, they're really stuck with the 3 property rule. If they're selling a large property and they want to diversify and they want to spread that out, then I expect them to have a fairly large list that doesn't exceed 2 times what they sold. So I sell a big warehouse, but I want to buy a bunch of little condos to replace this. Maybe I have a list of 5 or 6 condos to pick.
The total value doesn't
Right.
pass the $2 million.
Correct. Right. And then the third rule is called the 95% rule, meaning if the list has more than 3 and the list value exceeds 2 times what was sold, you have to buy 95% of the list. So functionally, you got to buy the whole list. We just rarely see that. Very rare.
Okay. So does that mean, did I understand correctly? This is, let's say, upon, I'm not clear about 95 rule. Do you mind repeating
Sure.
that?
So if the list has more than 3 and the list value exceeds 2 times what was sold, you have to buy 95% of the list. So I'll give you an example. I had a client sell a pretty large property in Northern Virginia, and he bought 15 rentals from a little old lady's estate in Richmond. So the list was more than 3 because it was 15, and all 15 added up was definitely more than 2 times what he sold, but he bought them all. It was a package deal. So he was okay with his ID.
Okay, I got you. Okay. Is it if let's say we couldn't find a property, but instead we found we decided to purchase interest in a property? Is it okay to buy an interest in a replacement property? I heard that there is this Delaware statutory trust.
Right. Yeah, so the exchange is about replacing value. So you could go in with others, buy an interest in a piece of real estate. So I sell $1 million and we find a $2 million property. Well, my neighbor wants to join me. I could buy 50% of it, $1 million worth, replacing what I sold, and he comes in and buys the rest of it as a co-owner with me. We would buy it tenants in common.
Okay.
You mentioned Delaware Statutory Trust. So there is a structure out there, what's called a DST, Delaware Statutory Trust. It's a form of ownership. And the IRS had said that if you buy into a beneficial interest in a Delaware Statutory Trust, that is real estate. So for example, the BJ's here in Gainesville, Virginia, where I am, is a Delaware Statutory Trust. If you look it up in the tax records, you're going to see Delaware Statutory Trust. And that tells me there's individuals like you and I that own beneficial interest in that trust, and it is real estate by definition.
Okay, so if you can't identify any property, there is an option to purchase an interest in those.
It is property. So the ID may be 1% of 123 Main Street that's owned by this DST, but it is real estate.
It is real estate.
Right.
Okay. So basically, I think we go over almost every item. Do you want to add something? Is there anything else you want to add to this?
These things really need to be planned out, right? Because the market is moving like crazy on us at this moment in time. My advice is that you really got to plan out this thing. When you get a contract to sell, you really start that process to sell. You got to make some decisions. Are you going to go buy something else and really start that hunting process? The clients that fail are the ones that don't do the planning. So I find out about it right before closing, and they haven't even on the one they're selling, and they haven't even figured out what state they want to buy in. And the clock starts on them, and they'll never find a good investment. And then they force themselves into something, whether it's good or bad, because they feel the tax bite, and they're not planning it. They're not prepping for it, and they're the ones that make the mistakes.
I know. I mean, one time I worked with this client from California, Los Angeles, and he wants to purchase something. I live in Washington, D.C., Virginia side. He was looking all over the place, and it was really tough, and he didn't have a clear indication for the investment goals. He was like, oh, give me a good investment. And I'm asking, what is a good investment?
Right.
Change
Right.
Is the cap rate important? Is
Right.
like yield important? What is important for you? What are you
Right.
comfortable with, right? You have to know those things before
Right.
you do this. So let me try to summarize this, our conversation. I understand we must start working with you before we sell our property.
Well, I'm not going to start any paperwork until there's a contract to sell.
But
But we start the conversation early, planning, thinking about it. What are the rules, all that stuff ahead of time.
just get you be engaged with you to understand the process so that we don't make mistakes in the process.
Correct. Right.
We have to, after we sold our property, we have to identify the replacement properties, like kind properties, in 45 days. And then we have to provide you those properties, the list of those properties to you in writing. And we have 180 days to close on that properties. Okay, one more question. That 180 days, is it starting from the point we sold the property or 180 days after 45 days?
Sold the property.
Sold
So from ownership to ownership is 180. In the first 45, you identify.
Okay. Both the property we are selling and the buying has to be investment property. So investment
Correct.
property is the key. There are 3 rules you clearly explained. With one of them is like a 3 property rule, 200% rule, 95% rule. I will let them contact you and talk to you in details to not to make sure that they got it right. Same buyer has to buy and sell the same property. I mean,
That's critical too, right? Because this is about taxes. So the tax owner that's giving up property has got to be the same tax owner that buys, that replaces it. It all gets reported on the exact same tax return.
Can I buy it from my brother or my mom?
Good question, right?
Um,
Generally, no, because that's called a related party transaction. The government is looking for what's called a basis shift among the family. So generally, no. There's a couple of very narrow exceptions, but normally, no.
Normally, no.
Right. It's okay to sell to related, but buying from related is where the issue is.
Yeah, yeah. You never know if the price is right. So, is there anything else you want to add?
No, I think that's it. Call me. Happy to help people with their specifics. It's what we do.
There's one question. Okay, somebody's talking about rain. Northern Virginia, JD. Well, yeah, it is raining outside here too, JD. Well, do you guys have any questions? This is the time you can ask. Put your questions over here. Let's see. We don't. Let me go over this. Okay, let me see if there's any question. No, I don't see any questions. So here we go. By the way, I wanted to share your website here. Share the screen so that that screen is gone. The website, guys, it is 1031.us. Yes. Let me open it one more time. So if you guys are interested learning more, this is the website of Bill, 1031.us. It's very simple. And you can call him from this number, 703-754-9411. And they are very helpful, very responsive. And I work with them. I can tell you that they're amazing. So back to this. With this note, I would like to close our meeting. Thank you, Bill, for joining us.
You're welcome. Thanks for inviting me.
Thank you so much and providing valuable information. It was amazing. I've been trying to learn this 1031 exchange for a long time. You made it very easy to understand.
Good.
Thank you all. Thank you all joining us today as well. If you need any help with a real estate purchase or sale or valuation of your property, give me a call. Phone number 571-271-6604, or you may check out my website, MyLocationAdvisors.com. To learn more about 1031 tax-free exchanges, you may check out Realty Exchange Corporation's website I shared with you. It is 1031.us. It's very simple to remember. And you may also call Bill's office, 703-754-9411. As I said, I work with Bill's team on several 1031 exchanges. His team is very knowledgeable and professional. Consider consulting with them if you are planning to buy or sell selling an investment property and doing a real 1031 exchange. His team will walk through the steps, and you will not have any problem during the transaction. Next week, we will have an interview on cost segregation, which is another great tool to save money on taxes. Stay tuned and follow our posts. As I mentioned, I work as a commercial real estate investment advisor. If you need any help with selling or buying or valuation of your property, give me a call, and I'm available to answer all your questions. And Bill is here. I brought you Bill as a gift. He is known for the Washington, D.C. metro area 1031 group. So if you have any questions, he is the person to ask, okay?
Cool. Thank you.
If you have a property to sell, I am the person to call.
Yeah, perfect.
Thank you, Bill. Thank you so much.
You're welcome. Bye, everybody.